Good afternoon, traders. What are some questions you must be able to answer before you start day trading stocks? Now, this assumes you already have a funded brokerage account and you know how to place trades. What is day trading? Well, the most basic definition is a trade made within one market day. And what's a market day? It starts at 9:30 a.m. Eastern Time and goes to 4 p.m. Eastern Time. If you hold past the market close, you are no longer day trading. You've already broken the plan of a day trader. When do you want to trade and why? So this could be something very unique to your situation. Maybe you have a day job, so the market open is out of the question. There's other times you can trade as early as 4 a.m. Eastern Time, depending on your brokerage, and as late as the market closes, the extended hours close at 8 p.m. Eastern Time. So there is a vast range of time that you can be trading in. You need to figure out what's best for you and then how to capitalize on the different types of movement that you're going to see during that time period, how to find the stocks that are trading during that time period. Number 3, what kind of stocks are you looking to trade? Everyone's heard of blue chip stocks. One that comes to mind is Dollar General. It's a very well-performing stock in the long term, but is it something that you want to day trade? Absolutely not. It moves very slowly throughout the day. Even on its most volatile day, the amount of money that you can make day trading a stock like that is next to nothing. So you have to look through all the different types of stocks. There's even more. These are just some examples. You've got micro caps, mega caps, medium floats, all these that are listed here. So you have to look at those and figure out why you may want to day trade one over the other, depending on the amount of time that you want to be trading for. For me, I like to trade what I call lower float stocks. That's stocks with a float size of 100 million shares or less, because I know that those can move pretty quickly in a short amount of time, and I'm only trading for about a half an hour each day. So number 4, what screener will you use to find your stocks, and will it find the stocks you're looking to trade? Now, so this is kind of going back to that previous one. Once you've figured out the types of stocks that you want to trade, then you have to be able to put those criteria into your screener so that the screener spits out a list of stocks that meet your criteria. And that kind of goes into number 5. What is the criteria? So are they lower float stocks? What's the price range? That kind of thing. 6, what chart criteria must be met? So this is where your setups or chart patterns happen before you enter a trade. There's many different patterns out there. You really should try to find out which are some of the safer bets, meaning the higher probability setups, the lower risk setups, and then just pick one and just trade that for a very long time so you figure out not only how to trade it, but then try to collect data on what's the probability of the trade working out when you take that setup. So for me, I like to trade the ABCD pattern. I have a video talking all about that if you're curious. There's some other really popular setups like a 3-bar play, reversals, things like that. So look into the different chart patterns and why you might want to trade one over the other. But I strongly suggest you just pick one and you stick to it for a very long time until you've mastered it, and realize that there are more to taking a trade than just looking at a chart and finding a pattern within the chart. You also need to look at where the chart was previous to that in the pre-market, the day before, that kind of a thing, before you decide that your pattern has met, your criteria for the pattern has met, and that you're able to take a trade. Number 7, what is your exact entry point, your stop loss, and your take profit? This is absolutely critical for new traders. A lot of times they see a pattern, they think it's a good setup, they think the stock is going to go to the moon, they just jump in, they have no idea where they're going to take profit, they have no idea where their stop loss is if they're wrong and the stock starts to go against them, and that's when they break the rules of a day trader. They start holding and hoping overnight or for days or weeks. So make sure you always know exactly where you're going to stop out if the trade goes against you, and where you're going to take profit if the stock actually goes in your favor. Number 8, how large of a position size should you trade with? For me, my full position size is 10% of my account. That's something you have to figure out, but after doing a lot of trial and error and just studying what would happen if I took more or less of a position, that's where I feel most comfortable with. If the trade loses, I almost always fall below my desired max loss for the day whenever I trade with a 10% position size. Now, This is a really important point. When I'm testing a new strategy, I do not trade with 10% of my account. I just trade with one share, and that's it. It doesn't matter if it's a $1 stock or a $50 stock. It's just one share, and if the trade loses, then it's not that big of a loss, and I can easily recover from it, and that's it. And that's what you should be doing until you have proven yourself profitable, proven that you can follow your plan and your strategy. So if you can answer all of these questions, then you have a trading plan to follow. But will you follow it? Is the plan profitable? How can you test it to be sure? Should you paper trade it? So that's all really important stuff. If someone just handed you a trading plan and said, hey, this trading plan works 50% of the time, and if you trade with 2 times your risk, you're guaranteed to make money. But you have to know how to trade the plan. You have to be able to execute it perfectly. You have to make sure that you follow it, all that kind of stuff. Make sure you manage your risk. So just because you have a good plan doesn't mean it's going to make money. So that's why I, again, strongly suggest trading with one share until you've traded it at least 100 times and you've proven that you can make money with it. Once you have a plan, even if it still needs to be tested, we talked about that, the one share thing, you should write it out in a Word document like this, read it daily before trading, and modify it if you find errors or weaknesses. This is a really important point that I'm sure at least 90%, maybe 99% of new traders do not do this. They don't even have a plan. They just have something in their head that they think they know, that they think they follow, and they really have no idea what they're doing. If you don't have it written down, you're really just gambling. You're going to find out very quickly that as you trade, there's going to be all these weird scenarios that happen that are not even in your plan. You have to add them to your plan as you see them so that you know what to do next time. And then the reason why you have to read it every single day is because the market trades differently every day. So you might have something in your plan that protects you from one particular event that happened on one day, and then you don't see that again for the next 30 trade days. Are you going to remember that 30 days from when that happened? What was I supposed to do when that happened? Well, if you read your plan every single day, you will remember. So that's why it's important to do that. And then at the end of every trade day, whether you are red or green or break even, you'll at least know, hey, I read my plan and I know my plan and I followed my plan. So I did everything in my power, and you won't feel bad. That's the psychological part of trading that everyone gets caught up in, where they get bummed out and they feel like they need to revenge trade on the market because, it's rigged, it's so unfair, whatever. If you're reading your plan, you know your plan, and you follow your plan, then you never feel emotional after a trade day is over, whether it was red, green, or break even. All right, guys. So no matter what, go into every single trade with a plan, follow it, stick to it, no matter what. Take your stop losses, honor your profit target, and in the long run, you should be green. Take care.